Hi everyone. So welcome to the live stream today. It's always a pleasure coming your way. Very sorry, but we've been away for some time and we've not been able to jump on the live stream with you. But hey, we've been putting things in place to ensure that we provide you nothing but the best. I'm really excited to have you guys back here on the live stream as we continue with our discussion towards the ICA November 2021 examination. And I see some of you guys joining. You are welcome to the live stream. Give us a thumbs up on the video when you join. And also remember to share the video. Let us reach as many students as possible. Most importantly, I want you to comment in the chat box, comment in the comment section, any questions you have. What are some of the things you would want me to cover on the live stream going forward as we continue with our discussions here on YouTube as well as on Facebook, because we are streaming simultaneously on YouTube as well as on Facebook. So comment in the comment section, comment in the chat box. What do you want us to share on the channel more? What topics would you want me to cover? What questions would you want us to look out for? Put it in the comment section, put it in the comments box. I'm going to be reading all of your comments. I love to hear from you. Let me know as well where you are watching us from, and also let me know the subjects that you are writing and how is preparation going towards the ICA November 2021 examination. We started with our lectures last week Monday, and so we are in the second week in our discussion towards the ICA November 2021 examination, and it's always exciting to really go through this 16 weeks as we prepare ourselves for the examination. Today we are focusing basically on IAS 16 as well as IAS 23. That is dealing with how we solve questions about initial recognition as well as subsequent measurement of property, plant, and equipment in accordance with IAS 16, and how we deal with borrowing cost in accordance with IAS 23. Borrowing costs. Now, remember that when an entity borrows funds to acquire or build qualifying assets, as per IAS 23, the borrowing cost has to be capitalized as part of the initial cost of the asset. However, the capitalization of the borrowing cost as part of the initial recognition of the asset is dependent on the time that the asset was began construction up to the time that the asset is ready for use. And so it means during the capitalization period, that is where we are going to be including that interest in the initial cost of the assets. Then also, when it comes to dealing with the initial cost of the assets, there are certain things that must be included in arriving at the initial cost of the asset. And we're going to be looking at two sets of questions today as we continue with our discussion and see how these pieces can be added together. Now, for those of you writing public sector accounting and finance, this is my new book on public sector accounting and finance based on the ICA syllabus with over 100-page focus on practice questions, on final accounts, on ratios, on budget, and various key topics in the syllabus. So you can get a copy of this. It's 120 Ghana cedis per copy, and you can get it delivered to you wherever you are at, and you can get a copy of it. It is 120 cedis. You can call us 050-114-9296. You see the number scrolling below your screen, and you can get access to this book so you can use it to prepare well for your examination. So that is our notebook on public sector accounting and finance, very focused and looking at the critical issues you need in order for you to pass the examination in that case. So let's get to the day's discussion, and then let's see exactly what we need to do for today. You're ready about that? Comment in the chat box. Let me hear from you. What subjects are you writing? What are the things you would want us to cover on the channel more? Let me hear from you guys, because you know that we plan these live streams as per your request, as per your requirement, and I want to make sure that I'm providing you guys with really what you require and really what you need to assist you in your preparation towards the exams. I see a comment from Eva Ben said the network is not favorable, so I will watch it later. Okay, so probably you mean the network from your end, I guess. I will watch it later. Okay. So probably from your end, because I think my feed here, it's great. And so we're going to be going into it. Let me know. I see another comment also coming in from Richard Adu saying corporate reporting. Okay, so you're writing corporate reporting there. Let's see what we got there. Richard Edu said corporate reporting, coming up with that. Okay, so corporate report. So what in corporate reporting you would want us to share our thoughts on, or deal with, or discuss on the live stream? And then he also said advanced taxation, and then advanced audit. Okay, so it means that you are writing the level 3 papers in that case. Okay, that is great to hear. That is really great to hear. I believe that you are studying well, and you are have started studying or joining lectures in that case. I see another comment coming in from Frederick Nana Asare. He said, I'm Frederick from Insawem. I'm writing FR and FM. Okay, that is great. Financial reporting and financial management. All right, that is very great. Remember, I have shared key areas you need to focus on to pass financial reporting, key areas to focus on to pass corporate reporting, key areas to focus on to pass advanced audit and assurance, and financial management. I've shared all of these on the channel, and you can check it on the playlist to the channel, on the how-to playlist on the channel, and you can see all the key areas I shared on how you can pass these papers. But most importantly, I believe that you guys are attending lectures, because like I say all the time, you don't want to do this on your own, irrespective of how sharp you think you are. You need to really get that assistance. You need to really be part of that community. So you want to make sure that you are part of the community, you are attending lectures, because really it will help you to navigate this journey better, so you prepare well for the exams. So let's get into the day's discussion, and we want to look at a question here with IAS 16 with a touch of IAS 23 borrowing cost. So something about IAS 16, but it has a touch on IAS 23 borrowing cost. And let's see how we can actually answer this question. The requirement on this question is for us to calculate the amount. So keyword, we should calculate the amount of property, plant, and equipment to be in respect of the new store, and the state, and states the impact of the above information on the financial statement. So we should calculate the amounts to be included as property, plant, and equipment for the new store. But not only that, we should also spend some time to state the significance of the information on the financial statement for the year ended under consideration. So let's see the information we have at our disposal, and let's look at what exactly we need to do. So let's see. Construction of Hamco's new store began on 1st April 20X3. Okay. The following costs were incurred on the construction. All right, so of the bed, in accordance with IAS 16 property, plant, and equipment, when it comes to initial recognition, or when it comes initial measurement of assets, the standard states that the initial cost of an asset shall be the purchases or the manufacturing cost, and any other directly attributable cost incurred in bringing the asset to its present use. So we're going to be having the purchases cost, the purchase or manufacturing cost, and any other directly attributable cost, and any other directly attributable cost incurred in bringing the assets to its present condition or use. In other words, the initial cost of the asset shall include the cost we incur in buying it and any other cost we incurred in the arrangement of the deal. Please note that always it is when the asset is ready for use, not when the entity starts using the asset. I am emphasizing on this because it's very critical. Because sometimes an asset can be ready for use, but the entity will start using it in 6 months' time. In that case, do we continue to say that any other cost we incurred between the period that the asset was ready for use and the entity starts using the asset, any cost we incurred there, do we capitalize it or write it off? We need to write it off because the standard didn't say when the entity starts using the asset, but it says when the asset is ready for use. So that is the fundamental principle in that case. Note that this directly attributable cost we're talking about here includes things like import duties, installation costs, dismantling costs, and most importantly, as we will see in this question, borrowing costs. As we will see in this question, borrowing costs. And that is very critical in that case. So let's go back to the question. Now, remember the work starts on 1st April 2014. So the work starts on 1st April 20x1, sorry. That's when they started the work. Remember the period we are preparing the financial statement for is 31st March 20x2. Okay, so more or less like a full year financial statement we are preparing. But you got to be careful here about exactly what is going on. So stay with me carefully here as we unpack these things. So we are told that the following costs were incurred. We see freehold land. Okay. Now, definitely the land will be included in the construction. So the cost of the land will be capitalized. So it will be included. Architect's fee. Definitely architect is part of the initial cost of the asset. Without the architect's work, the building cannot be actually brought to fruition. So the architect's fee will be included. Then site preparation, very critical. We need to clear the land, do all of the work that has to be done. So that is also critical in that case. Then 3, materials. Definitely, this is a construction of a store. Hence, the materials we use in the building, in the construction, has to be included. Then we come to direct labor cost. Very critical. The labor cost, because it's about manufacturing of an asset, the labor cost has to also be included in that case. So yes, that is also going to be dealt with there. Then we see legal fees. Definitely legal fees, because sometimes as part of this is about getting maybe permits, the building permits, the land acquisition fees, and all of those things. All these things will be captured in the legal permit. Then we have an item here called general overheads. Who cares about that? That is general overheads, not specific overheads. What it means is that this general overheads will be incurred either way, whether the entity constructed the building or not. So this general overheads shall not be included in the initial cost of the assets. Instead, it will be written off in the profit or loss account as part of the expenses incurred for the period under consideration. As part of the expenses incurred for the period under consideration. But then we have other information there. So let's catch the information that the examiner has included there for us as well, real quick, for us to get a full picture. So the store was completed on 1st January 20x2. So stay with me carefully here. They started the work on 1st April and completed on 1st January 20x2. Okay, so how long is that? That is going to be April, May, June, July, August, September, October, November, December. 1, 2, 3, 4, 5, 6, 7, 8, 9. So that is going to be a 9-month period. Now, why are we interested in the period of the construction? Because of the additional information there. So look at it. And was brought to use following its grand opening on 1st April 20X2. Now, listen carefully. The asset was ready for use on 1st January. That was when the asset was ready for use, 1st January. But then the entity started using the asset on 1st April 20X2, meaning they waited 3 months after the asset was ready before they used the asset. Now, like I told you, any cost that is incurred between the period when the asset became ready for use and the asset was now being used will be written off in the P&L account and shall not be included in the initial cost of the asset. So we don't care when they started using the asset. Our focus will be on when they actually finished the asset ready for use when we are talking about initial recognition. Let's build it up. Let's build it up. Hamco issued a 2.5 million unsecured loan on 1st April 20X1 to aid construction of the new store, which meets the definition of a qualifying asset as per IAS 23. Okay. So the company has issued some loan notes, okay, to finance the deal. So quickly, it means that some borrowing cost issues will be coming here in the picture. And they actually issued a loan note of $25 million. We are told that the loan carried an interest of 8% per annum and repayable on 1st April 20X4. Now, again, the time that it will be repaid, it's not our focus here, but we are just going to be dealing with how the interest will be dealt with. So that is going to be at 8%, $25 million at 8%. Now, stay with me carefully here. The loan was issued on the same date the construction started. What does that mean? And the construction 9 months. It means the interest expenses for 9 months will be included in the initial cost of the assets. Then the other 3 months for the year under consideration shall be written off in the profit or loss accounts. I hope you're getting the picture very well. That is very, very critical. So the loan was issued on the same date construction began, and the loan was for the construction of the store, which met the definition of a qualifying asset. As such, the borrowing costs incurred during the period of the construction would have to be included in the initial cost of the asset. So this is the breakdown of the question that we have. So let's try to put the pieces together. So property, plants, and equipment. Remember, the name of our company is Hamco. But let me be excited about it and bring that above. And the company constructed a store. We're going to tell the examiner that we like to work 3 zeros up, right? So let's bring the various cost items up. Let's bring the various cost items up. So what are the various cost items? We see freehold land here, 4,500. So we'll bring it up. Let's take this little above. 4,500 here. Then we go back to the next item. Architect fee, 620. Architect is very critical. So architect fees, 620. Let's go to the next one. Site preparation, 1650. Let's bring it up. $1650. Then we go. Materials, certainly 17,000. Sorry, how much is it? 7,800. Then we move. Direct labor cost, 11,200. Then legal fees, 2,400. That is necessary. It's not a general legal fees we are preparing or we are paying. Then another item there is the overhead, the general overheads. Like I told you, this general overheads of 940 will be taken to the profit or loss account as part of expenses because this is a general overhead. It's not a specific overhead. It's a general overhead, meaning the entity would have incurred it whether it is building or not building, whether it is building or not building. But then there is a loan the entity went for, and this was the analysis we did. The entity went for a 25 million loan as part of the deal to finance the construction of this particular asset. So the question is, the period of capitalization, like we've mentioned already, is 9 months. So when it comes to the borrowing cost, we're going to be having 9 months coming in. So our borrowing cost will be the 25 million by 8% times 9/12. Remember, the asset was ready for use on 1st January 20x2, which is 9 months from 1st April 20x1. But then the company occupied the asset on 1st April 20x1. We don't care when they occupy the asset if we are dealing with initial recognition. Our focus is when was the asset ready for use. It is the time that the asset became ready for use that we are going to be looking at. So let's punch that out. Let's see what we got there. Let me bring in 9/12. I have my Casio here today. 25,000, 0.08. Boom, I'm getting 1,500. So we add all these up, and that gives us the initial cost of the store. The initial cost of the store. So what do we have? Let's add it up. 4,500, 620, 1650, 7,800, 11, 200, 2,400, 1,500, boom, 29,650. You can confirm this as well. So this becomes the initial cost of our assets. That is the initial cost of our asset. So you realize that according to IAS 16, the initial cost of the asset shall be the purchases cost or the manufacturing cost and all other costs incurred in bringing the asset to its present use, in bringing the asset to its present use. So that is the initial cost. But the question is, are we done? No, because if you realize in the question, the examiner said, and this is where a lot of students get it wrong. So because the examiner said something that we need to also pay attention to. The examiner said, calculate the amount to be included as property, plant, and equipment in respect of the new store. That is the first part. That is what we just did. But it says, and state what impact the above information will have on the statement of profit or loss, if any, for the year ended 31st March. So we need to state the income statement impact that this particular transaction will have. So the income statement impact. Number one is the issue about the general overheads. So the general overheads that the entity incurred, how much was it? Let's go look at it. 940. Remember we said we will write it off as expense. $940,000 shall be written off as expense because it's a general overhead. Okay. Then, if you remember carefully, you realize that the interest should be from 1st April to 31st March, full year, because the financial statement we are preparing is to 31st March, okay, full year. But then we capitalize only 9 months. So the remaining 3 months, where do we take it to? We take the remaining 3 months, which is the uncapitalized borrowing cost, to be written off in the P&L account. So the remaining interest which is for January to March 20x2 is capitalized. Sorry, it's written off as expenses. Now, how much will that be? Let's calculate that. That's going to be 25,000, 8%, 3/12. Let's see what we got. So 3/12 by 25,000 by 0.08. I'm getting $500,000. So this will be written off in the profit or loss account. So that is the thing you need to understand in that case. That is the thing you need to understand in that case. Now, there is another third thing we need to remember here. You realize that the asset became ready for use on 1st January, but the company started using the asset on 1st April, which means that there must be a depreciation calculation. Stay with me carefully here. The asset became ready on 1st January, and the year ended is 31st March. So if you realize the asset was ready for use, and it was 3 months after it was ready before the entity started using the asset. For that reason, we are supposed to calculate depreciation for this 3 months period and charge that into the P&L. However, in the question, we are not giving any information about how depreciation is supposed to be calculated. We are not giving the economic useful life of the store. If we were, we would have calculated depreciation chargeable for the 3 months from January to the year ended 31st March. Now, somebody will say, Nhyira, they have not used the asset, but the asset was ready, but they are not using the asset. According to IAS 16, as far as the entity or the asset is ready for use, depreciation on the asset begins when that asset is available for use. So depreciation on asset begins not when an entity starts using the asset, but when the asset becomes available for use. So the third thing is that we would have calculated depreciation for January to March, assuming the economic life of the asset was given, or better still, assuming we were given the percentage for the depreciation on the asset. This is the answer to this question when we talk about the issue in relation to IAS 16 and the borrowing cost. Any question on this particular question? So that is what you need to understand about this. So that is IAS 16 and borrowing cost in the picture there. Let me know in the comment section any questions you have for me, any clarification that you want. I see some of you guys coming up. Share the video. Let us reach as many students as possible. Also, give us a thumbs up on the video. It helps us a lot to get a video to be more engaging, and YouTube will push it so we can reach as many students as possible. So let me know if you have any questions for me real quick. I see some comments coming in. Let's see. Ajay Abeko Rubin said, please, when will you have strategic case study and advanced audit on life? Okay, so Bediako, continue to follow us on Instagram. Details of that will be posted one of these days, depending on the request we get, because we did a poll and on our channel, and one of the things that you guys mentioned, you wanted about 70% of the people who contributed to the poll said, Nhyira, We want videos on the accounting standards and those things. So it means that these are the things people want. So if case study and audit, we get a lot of requests on that, definitely we will be jumping on the live stream and doing a class on it. Museba said, hey, Mr. Nhyira, good to see you. Good to hear from you, Museba. I'm kindly asking if you can some practical questions on budgeting and budgetary control. Okay, we will see if it is, we can look at some questions under budgeting and budgetary control as well as we continue with our discussion throughout this period. Nayan Gupta said, as per IAS 16, if we follow cost model, then in subsequent recognition, what to do we see is there is any major change in value. If yes, then what to do? I don't understand your question, so maybe you can retype, Nayan, so that I get the understanding you are trying to bring on board for me. Under cost module in IAS 16, initial cost is done at cost, say 1,000. After 1 year, value after depreciation was 900, but now its fair value is 500. In that case, we will carry it at 900 only, or at 500. I don't understand the 500 you're talking about. I don't know. I don't get your questions well, but if you are asking about, your question looks like revaluation of assets. If an asset is acquired and upon subsequent measurement, the asset is revalued to fair value, the asset will be carried from that time at its fair value, not at its carrying amount. So it will be carried subsequently at fair value, less any depreciation for the period under consideration. So it will be the 900, how much did you say the fair value was? It will be the 500, the fair value stated, less any depreciation for that particular period under consideration. So that is the idea about revaluation in that case. Any other questions for me? Any other questions for me? So that is the idea about IAS 16. And most importantly, how you do the treatment for the various items. And then when it comes to where there is a borrowing cost in the picture, how do you do the treatment for that as well? That is very critical. That is very, very important. Remember that on subsequent measurements, depreciation and all that will be coming into the picture, and you have to be on the lookout to answer that very well for the entity, to answer that very well for the entity. So any other questions for me real quick? Any other questions for me real quick on that particular question we just looked at? Okay. All right. So that is the idea about the question I wanted to bring to your knowledge on IAS 16. There is another question here that you may want to try your hands on. Okay, I see a question coming from Nayan again. Let me see if I can take that up. So if there is major change in value, either in cost or revaluation model, we use the revaluation model. Yes. Because whether you are using cost module or revaluation module, once an asset is revalued, as per IAS 16, the asset should be carried at its fair value. Whether it is only when the fair value of the assets cannot be determined, that is where the entity will carry the asset at its historical cost, less any accumulated depreciation in that case. Less any accumulated depreciation in that case. Then I see another question coming in. Lukman Jackman said, hi, Nhyira. Understanding the standards has not been my problem, but the application of the standard, I know we'll tackle that in class. Okay, definitely that is very true. And this is one of the scenarios of the application of the standards. Okay, so you know that borrowing cost. This is how it's supposed to be treated. But now you are presented with a question. How do you apply it? How much interest do you include in the initial cost of the asset, and how much interest do you write off in the P&L account? So that is the idea about the application. And like I say all the time, the more you solve questions, the more you expose yourself to a lot of the treatments, because it's one thing to understand and it's another thing to really apply the standard that you claim you understand dealing with that particular item. You said, I know we'll tackle that in class. Okay, so it means that you have enrolled in our online course and you are learning directly under my mentorship. Okay, so we will deal with that in class. I think this Friday we'll be starting with the IAS 16, and we have some interesting questions we'll be looking at under IAS 16 that will really help us in the application of the standard. So stay tuned on Friday, God willing. We will be starting with the accounting standards, and certainly we will look at how we can apply that in class, if it is FR or if it is CR in that case. All right, so any other questions? Any other questions? Any other questions? Now, one of the issues also is that okay, I see. Okay, so Jackman said yes. All right, that is great. That is great. I think the name, your YouTube name is not a name I've seen on my list of our students this semester. So that is why I wasn't certain to take that name up easily. All right, so one of the things we've also seen on our channel is that, I mean, about 58% of you guys have not subscribed to the channel. Man, what are you doing? There are two reasons we want you to subscribe to the channel and hit the bell, notification icon. Number one is that when you subscribe and hit the bell notification icon, when I go live like this or release new content, YouTube will send that to you directly so that you will be able to join and then study and prepare well for your examination. The second thing is that your subscription and engagement on the channel helps the channel to be pushed again by YouTube so that new people can discover the channel, so we can reach as many students as possible. Because if you are getting value on the content that we are putting on the channel, imagine how other people somewhere who are not getting access to some of these things will also get a value in with your support. So make sure that you subscribe to the channel if you have not subscribed, and hit the bell notification icon as well if you have not, because that way you will be notified when we release new content. Again, this is our notebook on public sector accounting and finance. So for those of you writing public sector accounting and finance, you can call or WhatsApp us, and delivery can be arranged for you in that case. So I'm going to be concluding around here today for our discussion. Our focus today was to look at how we can do the initial recognition of transactions and also deal with borrowing costs when included in the initial recognition. But there's a takeaway I don't want you to forget, that depreciation on assets are charged not when an entity begins to use the assets, but when the asset becomes available for use. That is something I want you to take note of, because the examiner can play on your intelligence, and if you're not careful, you will ignore that, and you will really going to be getting a wrong figure for your or item for your depreciation. That is a line item, and that may be wrong because that will affect your administration cost or probably your cost of sales. So you're going to be losing those ticks in there. Then when you go to property, plant, and equipment on the face of the balance sheet, also the carrying amount, you're going to be losing that tick as well. So it's very important for you to understand these minor details, because this is how you're going to be getting the marks. It is the ticks that you're going to be getting from your workings that will add up to help you to pass the examination. So I'll catch you same time tomorrow at 4:30 p.m. as we continue with our discussion. What will be discussed tomorrow will be posted on my Instagram page tomorrow morning. So make sure that you follow me on Instagram in case you're not following me on Instagram, and stay connected so that you'll be getting the notification about it. We've resumed this live streams, and we're going to be doing this hopefully till you write the exams, and we're going to be coming your way. We're going to be also having some Zoom sessions, public Zoom sessions like this, where you will jump on the Zoom call with me and speak with me directly, and we're going to be doing some Q&As as well like that as we continue with the discussion. So thank you very much. It's always a pleasure coming your way. George K. Amofa said, thanks, Nhyira. Thanks so much. Always a pleasure, George. Always a pleasure. And thank you guys for joining the live stream. Remember, you can enroll in our full course on NhyiraPremium.com. You check the description to this video, the first link in the description. You can enroll in the course. It's 390 Ghana cedis and study directly under my mentorship. Let me assist you, hold your hand, provide you with the blueprints that you need in order for you to prepare well for the examination, go into the examination and pass, but most importantly, take your life to the next level. Thank you for joining the stream, and I'll catch you same time tomorrow. Stay safe and stay blessed. Bye-bye.